Frank Curzio here with another live video, and it's titled Biggest Reason Why You Should Buy Every Dip. I've been saying this over the past 5 months, and same thesis continues today. So if you look at CNBC, look at Fox Business, they're talking about the market surprisingly going higher and higher while they identify key risks. Those key risks are stimulus, they're the election outcome, and a new vaccine. Those are three risks that I've been told by analysts today that I can't believe investors are ignoring. And it's not that we're not ignoring. I think we have to understand that these are short-term risks that are going to end within a month, month and a half. If you look at the stimulus, it might not happen pre-election, but it's definitely going to happen, right? So you got another $2 trillion minimum that's going to float into the system. You have an election, as long as we get a decent outcome within a week or so, that's going to create certainty for the markets. Is going to be, if Biden wins, he's leading right now, there's going to be sectors that are winners and losers, obviously. People invest accordingly, but overall, there's a sense that the market will be okay and go higher. And then you have the vaccine, which I would say if it doesn't happen this month, it's going to happen at the end of November, definitely this year. So you have three short-term risks that I don't know why investors are so concerned with. Again, they're all short-term. They're going to end in the short term. And now when we look at the whole scope of the entire market, now what do we see? We see lower rates, short-term. Fed came out and said they're going to be low for a very long time. Even if on the high end they go higher, they're going to put in yield curve control because that's the biggest risk to the entire market is higher long-term rates. That's not going to happen. You have $6.5 trillion of stimulus already thrown into the system. People are dying to go out. People are dying to spend. Yes, we know some people are struggling, but we have another stimulus plan of $2 trillion in the works. Where else are you going to put your money in this market? You're going to put it in bonds. You're going to put it. I mean, even you're looking at the market where dividend stocks are going to be the new growth stocks. So when you're looking at stocks, yes, you're looking at a higher valuation, but when you see that growth and the expected growth and inflation coming, that's almost a guarantee. It's going to continue to put a bid under this market. So any short-term pullback, guys, continue. But same for 5 months, continue to do. We're going to be hitting new highs constantly going forward, especially through next year. A lot of late name cyclicals and small caps are going to go through the roof. So Dillard's up 40% already. All these names are going to reopen. We know COVID isn't as bad as it seems, and all this stuff's going to go away after the election. So, listen, all the positives are still in place. Don't fight it. I don't like the fact that the Fed's throwing money at this like crazy. However, as an investor, you got to be investing a lot of these names into the stock market. It's going to go a lot higher from now, definitely through next year. So, I'm Frank Curzio. As always, I'll get back to you guys soon. Take care.